Bitcoin stumbles. IPOs are toppy. Inflation sizzles. It's hot, hot, hot. And it really feels like the air is coming out of the speculative bubble. What's next? Let's look into this and see if we can sort this out. Is it the beginning of the end, or is there hope for other opportunities for investment in the stock market? I'm Bruce Frazier, your host. Let's summon Professor Wyckoff and see if we can use his inspiration and encouragement to determine what's going to happen next in financial markets. A few weeks ago, we had a discussion about distribution, and we used the distribution schematics. You can see them here. These are just two types of distribution. There are others. These are principles. They are not patterns. And so we look for the characteristics that tell us that a stock or an index or a commodity is being sold by the large informed interests and no longer has the support of these interests. And ultimately, once they distribute these shares to the public, to weaker holders, which could be institutions, downward it goes out of the distribution area and into a big markdown. Let's look at the current markets and see whether or not there is something at work here. Here is Bitcoin to the dollar. This is an upward stride that goes back to the COVID lows of March a year ago. And you can see the stride is pretty well defined. We have a throw over of the stride here. Look what's happened. All of a sudden, we are back into the channel after being above it, and it has the characteristics of distribution. So let's have a look at this. Maybe we should be doing some point and figure analysis to see whether or not there's enough distribution here to take it back to the bottom of the channel area or to this support area around 32,500. Pretty big break for Bitcoin. So let's see if we can sort this out. Here is the daily chart. Here is the trend channel we just looked at. And let's go in and see this area. Well, preliminary supply, buying climax, automatic reaction, range bound condition, secondary tests, and upthrust, which is a form of secondary test with a very sharp break. This break takes out this prior low, so we're going to call it a sign of weakness. Often what follows a sign of weakness is a last point of supply. And it appears that that is what we have here. Notice that the quality of this rally is not so great. It tends to start off okay, but then it loses its steam as it gets up into the resistance areas defined by the buying climax. Look what has happened next. Right here, we can see that there's a sharp break. Well, this is on the announcement. Really a psychological blow to the speculative class that Tesla, Elon Musk, is not going to accept Bitcoin for the purchase of Teslas any longer. This seemed to have sort of a psychological effect on the market in here, but notice what happened. This all occurred at the exact moment when Bitcoin came back into the channel. So there was volatility back into the channel, which is exactly what you would expect. This is support here on a rising scale, and then all of a sudden you have tight ranges here and then a failure back in. Now we're approaching the support as defined by the automatic reaction. And this area here, we would look to see whether or not it can hold in the area of the support and then produce another rally. If not, and it has what we call a pause at the ice, which is right around this area, and then fails, that would be very disconcerting. So here is our point and figure analysis. First, let me draw your attention to this reaccumulation count. Look how pretty this is. We take this count across the 33,000 area, and it counts up to 62,000, 66,000, and this goes exactly into this area of the upthrust right here. And this produces a climactic surge of sorts with a failure, which we called a sign of weakness. And so this is confirmation that this point and figure count is working nicely. This also is confirmation that the point and figure analysis that we're doing on Bitcoin is working pretty darn well. So let's take two counts. I see two counts that I think are of interest, and those are this green box, which is from the upthrust over to the secondary test. This is a relatively conservative count. And this count across here, 7 columns, counts down 43,000 to 40,000. Well, this is right in the range of the automatic reaction. And here we are going to that range right now and reaching it. Now, this chart is through the 13th. I think that there's a little more data on the vertical chart on the left. Now, this should hold for a period of time, maybe permanently, and produce a better rally up. But if we have a break here and we go below the support area and then say the 40,000 zone right here, and then attempt to rally with very poor effect, then we would be looking for this next count, which now what I've done here is I've taken the count from the last point of supply and I've taken it up to the upthrust area. So you can see that's what this line here is. This is a pretty conservative count. And I know that some of you are saying, well, what about this count? And what about that count? And I say, absolutely, this is a serious consideration, but these counts, and if they are all part of a larger distribution structure, which it appears to be from our vertical analysis, this could be a count that goes way, way down from here. So we want to take this in bites and see what kind of reaction we can get. So a decline to 31,000, 26,000 here and here would be a substantial drop out of this distribution area, if it is in fact distribution. And so we would want to see how it went to this level. And also notice this is the support area of the reaccumulation zone on the way up. This is a natural place technically to go for Bitcoin is to the support area here and also here. So we will be watching that very, very closely to see what happens. And then finally, I just want to show you, here is the schematic that we just looked at on distribution. The one I think might be at work here, which is you can see not having the upthrust occurs in B, and I drew an arrow to it, and then a last point of supply. Notice here how you have a series of rising lows up into the last point of supply. This is what we have taking place here. And you can see sort of this effect with this trend line, which is a very long-term trend line, but you can see higher lows and then a breakdown. The higher lows throughout here and then a breakdown. So I believe that this is phase C, not the upthrust. This is phase C, and we could have a series of last points of supply and signs of weakness. as we go down through this area. So it'll be very interesting to watch. Here is the NASDAQ comp. I have sort of a bigger agenda here today, but I thought Bitcoin was so interesting we had to talk about it. And so here is a great trend line, which is drawn reverse use over these two peaks and a throw over here. And this throw over, look what happens after it returns back in. Keep this in mind with the Bitcoin chart we just looked at, because even though Bitcoin is just back into the channel, notice how once it went through the channel, became overbought, threw over, it then turned back in and moved easily back down to the bottom of the channel, which is defined here as a parallel of these two lows, the close here and then also the low here. So this is really interesting. Well, look where we are now, is we are right on the support area of the channel and flirting with it. This should produce a rally, but we're going to do more work here and see if we can figure out what's going on. So let's move on. Here is the comp. Here, this is the area. Go back. This is this area here and here. And we have gone from a weekly chart down to a 4-hour chart. And you can see that's this area here and here. Look at the distributional type structure that's occurred. You can see a climax of sorts, automatic reaction. This might be the climax here. This is an upthrusting action. Look at this, a big sign of weakness, a rally of poor quality, which we're going to call a last point of supply. It literally comes right into the overhead resistance right there. And then a failure downward, which puts us on that long-term trend line that we just evaluated. Now, down here, we have a 5-period moving average of the NASDAQ advanced decline data. And here you can see that the peak comes before the final high and divergence ensues here. And already this AD indicator is starting to turn down. It's an oscillator. It turns down towards oversold. Very similar thing happens here. You can see that it goes up into this high prior to the final high, which is this little upthrusting action. And then you can see the downward movement. And that downward movement is what we really want to focus on. Confirmation, early confirmation of the uptrend, and then a failure. Downward we go. And here that was just a little reaction for a few weeks, but nonetheless, it worked in the same way as these other two did. So it's a great trading tool, but also notice that what's happening here, this is important, is that look at this, lower lows, lower lows. And so with the lower lows, we are seeing the confirmation of declining prices. Well, we're going to go look at the NASDAQ comp in a couple of different ways here in a minute. So let's move on and keep going. Here is just to shift gears, because as you saw this week, CRB came in, or not CRB, CPI came in super hot. Producer price index came in super hot. And so they were, as we said at the beginning, sizzling. Well, oftentimes this is like the top line news. I showed you this chart a week or so ago. This was the count that we took back into the COVID base right across here. And it gave us a count 180, 212. And at the time that we looked at this at the end of the year, December 31, it was at 167. So now we have worked our way up to the 208 level. And I believe this was the price yesterday. And so you can see we're up here at 208 and very close to the top of the range of our point and figure estimate, which also puts us right into the resistance of the 2018 high. Now, what I'd like to say about this, especially with producer prices coming in very hot, people being alarmed. I mean, here we are, we're point and figure is telling us where this data wants to go. And of course, we have to trade, if we are trading, we have to trade the commodities. We can't trade CPI or PPI. We have to trade the individual instruments. CRB has those instruments in it. It's an index. So here we're looking at this and we can see that we're up into the top of the range. Well, maybe what has to happen is a new count needs to be made, a new cause for a subsequent new upward move. Or maybe this is the end of the move. I don't know, but we'll just let the market tell us. But here's the important thing is that into the top line news, which everybody is upset about. I mean, I'm using the term upset, but very concerned about CPI getting hot, and that we may be back into the 70s all over again. Look what's happening. The CRB has worked its way right into the top of our point and figure count of area on, and also resistance. Chart on the right, this chart is through April 28th, and you can see that it was around 200 then. So it's up here now. But what we're seeing is that we're seeing the what I think very well could prove to be the sell the news event in inflation for the moment. That doesn't mean there isn't more inflation coming later. We may have to build new causes in the instruments that are being traded. Such an example is one we looked at a few weeks ago with lumber. Lumber, we had a count that went here up to 1330, 1500. Now, we don't trade lumber. Lumber trades really thin. This is a continuous contract chart, which means that there's really not actually an instrument trading at these prices. It's a blend of a number of different futures from different time periods in lumber. And you can see this went up to the 1700 area here, and you can see that it just got above 1700, and now look what's happening is that it's attempting to turn back down towards the channel. This channel goes all the way back to October. So this is a throw over, has climactic qualities. It may be that in the near term, it could go down maybe to this moving average. This is an automatic reaction and then become range bound, and it has to spend time in this area. I have friends building houses. This is no good news for them, because it very well could be that lumber just sits up here at these extremely high prices for a period of time and builds a new cause for reaccumulation upward, or possibly for distribution downward, but it's too early to tell. But notice that this goes up to that 1500 area up here. Well, it definitely threw over the top of this channel. And a special note to one of our dear Wyckoff Nation people who was talking about, well, what's the right continuous contract instrument to count, point, and figure on? Here's my experience. My experience is that you go back, because there's a number of ways to do continuous contracts, and different charting platforms do it differently. But what I do is I go back historically, and I do this with stocks, indexes, because they all have attributes of change in them, is that I go back historically and I test accumulation and distribution, reaccumulation areas for how well they count and work. And there is tendencies in different instruments to count with nuance slightly differently. I want to just point out here, because I think this is such a good point that was being made by our Wyckoff Nation person. I want you to become a Wyckoff Nation person, because Wyckoff is just the best. Is that, notice this smaller accumulation area here. this count went beautifully up to exactly 830, which was, I think, one box uh, above the final high that was made for lumber before it pulled back into a backing up action, last point of support after a big sign of strength, and then made it bigger count. And so this count here gives us confirmation and confidence that our counts tend to work. And notice how this count went up to the minimum level, didn't go to the 925 level. So that might be a tendency that would be something we'd want to keep in the back of our minds as we go forward. Here's the S&P as we're running out of time, but this is a 4-hour intraday back to November trend channel, reverse use of trend lines. See how beautifully all these touches adhere to the rising reverse use of trend line, and then a throw over at the end. So we've had a throw over. Well, look what happened here in the last few days is that we had an up thrusting action here, 42.38, and then that produced a failure back down to the bottom of the channel, where I would watch closely to see whether any kind of a rally, there's a rally today, any kind of a rally could follow and put it back up into the channel. But here's the resistance here. And so this resistance is all important because that resistance could be the area that the market rallies to before it tries to go back down again. Now, the chart on the right is a very long-term chart. And this chart goes back to the area of the base of the COVID low, big count, across here, big range. So there's a 600-point S&P range, pretty darn big. But look what happens is it goes right. These little counts worked really nicely also. But this count here, the big accumulation count, goes to 4160 at the high. Well, look what happens here, 4238. So it threw over the top of our upside count of the range, which happens all the time. We just saw this with lumber. And then it comes back in. Well, look where we are. We're at 4063. So already with a throw over and an overbought condition, it's turned back into the area of this count zone, which to me confirms the validity of the count. And so this is really interesting. We're going to keep watching this. I've shown you this chart a few times now, and I apologize for continuing to show it, but I think it's super relevant. So let's keep an eye on this. I'm going to pause for a second and get a drink and be right back. All right. And I also wanted to see how much stuff I've got ahead of me here because I want to prioritize and get the important stuff in. Dollar is important. I think the dollar is the issue regarding inflation. A falling dollar is going to reduce confidence that inflation's under control. This chart is through the end of the year, January 7, 2021. You can see the weakness into the end of the year. But at the time, I showed this chart and suggested that this was going to be an important support zone and that we should try to hold this area and rally. Here is an update. This is that zone right there. Notice the rally, and we've come back down. Well, with all of this concern about inflation and inflation being top line inflation being so high and so on, look at this, higher low, higher low. And so now we have these two higher lows taking place. The dollar's not breaking down with these inflation numbers. So let's keep that in mind. Also, we have a really good count of this zone right here, which worked out beautifully and has put us into a congestion consolidation area. I will say this, there's a larger count that goes down to the lower level of 2090, I believe that would be a bit of a disaster, and it could very well be in our future. But for now, I see something that looks very much like pretty good support in this area, and I think that this belies the concern in the short term for the inflation picture. Okay, here's the NDX 100. NDX 100, here's that distribution area we just analyzed on a point and figure, and you can see here that this is 30-minute data. This count goes down. We're down to 13,000 right now. Goes down to 12,447, 12,170. And so you can see here that there is further to go, and also puts us into the area of support over here. So that very well could happen. We just looked at the vertical chart of the S&P cash. Here is a point and figure chart, 30-minute data, 10-point scaling, one box reversal. You can see the distribution. I'm going to let you study this chart on your own. Right up against the support zone right here, counts down 39.60, 38.90. So there's room here for some kind of a meaningful correction. This is really an important chart, and so we're going to close on this. I think this is really the key to where we are in the big picture cycle for the market. This is the NASDAQ Comp. These are 3 IPO booms. I was in the business for all of them. Here is the 83 boom, and resulted in an 8-year decline in the relative strength of the NASDAQ Comp to the S&P. Here is the 2000 boom, peak boom after a long period of dominance by the NASDAQ Comp. And it resulted in a relative strength downtrend of 9 years for the NASDAQ Comp in relation to the S&P. And now we've had this really glorious advance here, and this upward move has taken us up. And I showed you this chart. This actually was done in October of 2020. I showed you this chart at the time because I thought it was really important and that we were into some kind of a climactic hypodermic type relative strength boom for the NASDAQ. Now, here is the same chart brought up through the 11th of May currently. So the only difference is the addition of new data. And here you can see that there really is still an elevated upward tilt to the NASDAQ Comp. But notice down here that this is turning down and now is starting to go into an important downtrend. So could this be some kind of a major decline in the NASDAQ Comp relative strength to the market? 40 seconds left. I'm going to come back to these charts next week, but I want to show them to you. These are 2 IPO ETFs, FPX, IPO, and you can see the distribution structures here. They are very impressive. Look at the signs of weakness that are occurring, and 2 counts. And these are relatively swing trading counts at this point. So it goes down 106 to 98, and this count goes 43.32. More room to go on the downside. And with that, I'm going to say so long. We'll pick this up next time. Thanks so much.